The situation in the oil market remains relatively stable, with the oil prices moving in the range of $80 to $82 per barrel. Oil traders are still on edge, taking note of signs indicating an impending decline in world oil consumption. Thus, amid weak economic data, Chinese refiners have already asked Saudi Arabia to reduce December loading crude oil volumes. Besides, market participants are taking into account the Energy Information Administration's forecast suggesting that US consumption is likely to fall by 300,000 barrels per day this year. Against this background, Brent crude oil futures halted their slide at around $80 per barrel, where the volume of short positions decreased. As a result, the asset gained some ground, but the downtrend remained intact. The benchmark will resume weakness if the quote stays firm below the level of 79.5 in the meantime. The most likely scenario suggests a rebound from the 80 mark. Moreover, the weekend's carnage has highlighted the risk that the Palestinian-Israeli war could develop into a wider regional confrontation. The Middle East conflict is fraught with supply disruptions from the world's top oil-producing region. Although there have been no official statements from a neighboring state so far, things can change at any moment. Any expansion of the conflict will immediately lead to higher oil prices. Given the situation in the Middle East, a noticeable drop in the gold prices is quite surprising. Gold futures ended the previous week with a loss of about 1%, dropping below the level of $1,950 per troy ounce. However, Friday's decline was triggered by signs of a conflict easing. Over the weekend, the situation has changed dramatically. If it continues to escalate, gold will have every chance of gaining strong upside momentum, and the metal may rebound to the mark of $1,960 per troy ounce, especially amid technically oversold conditions. The Russian currency has been trading at around 92 rubles per dollar for days now, and this is largely due to the expectations of a new package of sanctions from the European Union, the adoption of which is once again stalled due to the disagreements between some member states. Apparently, the next round of restrictions will have no impact on the economy. In this case, the ruble will gain value, with the dollar falling below 90 rubles. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.